Hey guys, what's going on? Happy Monday morning. Coming at you with my daily videos. So yesterday I made a video on my top 4 growth stocks. Haven't done it in a while because I've been away most weekends in the summer. But so I said I was gonna make this video about inflation and really big tech. I kind of want to spin it into both inflation and big tech. Before I get into it, make sure you like, subscribe, comment below. Really trying to get to 500 subs by the end of this month. I think we can do it. We are extremely close. So if you haven't subscribed, just hit the button below. If you haven't watched my channel, this is your first time watching it, I'm a long-term investor. I believe that's the best way to gain wealth. I don't do short-term trading options and I don't trade on margin either, actually, believe it or not. So that's a whole nother story, but I don't do that because I don't want to put myself in trouble. So that's my opinion. Big tech and rotation, and inflation. We'll add let me put inflation here too. Inflation. Spelled horribly, but whatever. So big tech, rotation, inflation. So I think the inflation is rotating down. So if you were to look at the year over year data that's provided, it's really high because last year people weren't spending, a lot of money was printed. So it's a little skewed. You can't really look at it that way. But if you look at the month-to-month data, April to May, May to June, it's all gone down. It's going inflation is showing less and less and less. So that's a good sign, showing that there's not as much inflation as what you think. The Feds came out last week saying that basically they see short-term inflation, but by 2022, the end of 2022 and 2023, they see it being right around 2 to 2.5%, which is basically normal. So then they're going to start raising rates. So you have a lot of people like Cathie Wood at ARK Invest who really dove into it and really had some great points that nobody really thought about. And she's right. So she's basically saying there really isn't going to be inflation like what everyone thinks. So if you're in high flying stocks or like her portfolios, the ARK Invest portfolios, like the ETFs, she does not want inflation because when inflation hits, people are a little, they're a little more careful with their money. They put it more in safe stocks like dividends and stuff like that. She has none of that. So I do think she's trying to save her ETFs, but also at the same time, I really think she is right. And I think she's super, super, super educated and all that stuff. So I don't think inflation is going to be as bad as what people make it out to be, especially on mainstream media, because they always do year over year, but they never talk about month over month. So it's a little strange that they want people to panic, or maybe I don't know what they want to do, but I think a lot of the people on there just stirring up news, I guess. I mean, that's their job, but it's not always right. Or it's not, no, it is right. It's just not the correct way of thinking about it if you're investing. So supply chains, if you look at lumber, material, semiconductors and stuff like that, the supply chains are easing up a little bit. It is nowhere close to being back to where it used to be. I personally think a lot of these supply chain issues are going to be issues for the next 2-3 years. They're not going to go back to normal for probably 2-3 years. Best case scenario. That's if there's no, additional lockdowns either, in any countries that, hurt the supply chain like in China or whatever. So there's a lot of ifs in that, but I do think 2-3 years. But however, the prices of lumber, material, and all that stuff are slowly going down, which is good. That means probably people are, some people are returning back to work. They're catching up with the demand. It's good. So when that happens, it actually lowers down the cost of items too, because if your demand is super high and your supply is super low, well, then the prices go up. So that's good. That's good for the economy that things are coming back. So like I just said, prices will ease up as more demand becomes available. As more supply comes, the prices will ease up. So we're going in the right direction there. So that's good news for the market. That's awesome. Where I would watch is I'm actually in a couple restaurants and I'm in a couple hotels. Wynn being my biggest position in the hotels. Restaurants, I was actually in 2 of them. I was in Texas Roadhouse and Cheesecake Factory for the past 2 or 3 years. So I actually sold my Texas Roadhouse position a while ago, and I am gonna probably exit my Cheesecake Factory one soon. The reason I say that is because I think these growth restaurant hotel segments, I think they're going to be really flat in 2022 because everything is priced to perfection right now. And people are going, the market already priced in what's going on right now. So I can't see it being I can't see it being any better than where it's at now. And the analysts are going to have these expectations for these hotels and restaurants to be insane for like the next coming years. I don't think they're good. If they've one bad quarter, it's going to destroy the stock. So they're at like all-time highs and stuff like that. I might keep my Wynn one because I do like that stock very long-term, but the restaurants I'll probably be exiting because they're probably going to be flat in 2022 in my opinion. So I'd rather put my money elsewhere. Like example, big tech. So Facebook, I love Facebook, love Amazon, love Google. So I'd rather apply this money because I've been in these for a couple of years and rotate them into big tech. So that leads to my next thing. I think a rotation is coming. This happens all the time. So in the summer and fall of 2020, it was all SPAC stocks, crypto stocks, growth stocks were going nuts. Then they crashed and fell on their face in the spring. Well, what people did was when they saw the inflation numbers and the unemployment not being as well and all that stuff, well, when people are scared or unsure of what the market's doing, they put their investments more in safe things like dividend stocks or value stocks. So the market always rotates, which is actually good. You just need to understand where it's going. And what I do is I actually keep because I'm a long-term investor, I keep my money in all of them always. It's just when I see a rotation coming or one's beat down, like tech and crypto right now, that's what I'm buying now. So it's going to come around again, and then I'm just making my positions bigger, and they're beat down right now. But when they come back up with the rotation, you'll be better off than before. So the way I do it is I don't chase my tail and react. I'm basically proactive in what I do. So example, I'm probably going to be buying Facebook soon, Google soon. I'll be buying, what else? Amazon soon. AMZN. That was butchered, but that's Amazon. I obviously, in my videos all the time, I buy Coinbase all the time. So these are all really beat down right now. But I think in 2022, how these will be flat, I think this space is going to be ridiculous, especially when the unemployment numbers come back down, they cut off all that, and people return to work, schools open back up, and then you're going to see these tech and cryptos kind of recover. And as things recover and people see the light at the end of the tunnel, they're going to be plowing money in these guys. And it's, they're just hammered right now. They really are. So that's kind of my plan with the big tech inflation and rotation all in one shot. I know that's a lot to digest, and it's, I could talk about each one of these probably for like 20 minutes each, but trying to get it done under 10 minutes. So that's what I got today. Tomorrow, obviously, I'll, make another video of something that is relevant and cool that I think. So that's all I got. Again, trying to get to 500 subs by the end of this month. So if you hit the subscribe button, it's much appreciated. That's all I got. Peace.